If you do not know how to invest, you will end up gambling. Know what the risks are first before asking how much returns I can get. The best piece of advice I got growing the money is not to invest without knowledge. That I should actually seek advice or seek education regarding the features and risks of investments, and start investing only when I know about the investment, and not to invest without knowledge, because investing without knowledge is gamble, and that will surest way to waste your money. The investors are small investors, largely retail investors, moms and pups, and they were looking for leadership. We didn't have an organization that would provide the voice or champion the cause. So I decided to give up law practice and give them leadership by forming SIAS, Securities Investors Association Singapore. And out of the 172,000, about 50,000 joined me. And with one voice, we resisted the various attempts to settle the dispute by steep discounts were suggested. We did not, we stood firm. We just wanted the migration of shares into our accounts. And finally, after we threatened to go to WTO with the government supporting that idea, the Malaysian government finally settled the issue. Because I discovered that majority of them didn't know about Malaysian stocks, about why they invested in Malaysian stocks. It was speculative market. So I decided that we should embark on investor education. 3 red flags that I would look out for when buying a stock is, first of all, who runs the company? Who runs the company, meaning how well is the company governed? Good governance is very important for the safety of your money in the company. When you buy a stock, you're buying into the ownership of the company. Secondly, I will look at the financial performance of the company. How has the company been performing, say, for the last 3 years? And what is the company's forward-looking business strategy? And finally, what are the risks? How can I lose my money? What must happen in this company that will wipe out my investments? My relationship with money during my growing up time was very restricted to very little money, because all I had was pocket money, right? There was no scope for growing my money, but my father had this habit of always saving a little, and I learned that saving was important. So if I get $1, 10 cents perhaps to just to save. Well, the type of investment I hold currently is largely less risky, modest risk investments. Given my age, I'm now 79, so I'm not into high-risk investments, government bonds, blue chips, and less risky products, and rental property. That's it. I'm not too spread out, but that's enough for my age. My investment strategy is basically investing in low risk products, and I can't take a long-term view, so largely a short-term view, and keeping money for the rainy day in fixed deposits, earning dividends from good dividend stocks. Well, the three money tips I would give my younger self is firstly, start saving when you're young. Do not spend beyond your means. I know young people of my age would use the credit card a lot, but do not get into credit too early. Number two, second tip I would give is have money for emergency. 6 months savings, work towards 6 months savings to keep aside for emergency. And the third thing I would tell the younger self or myself is start investing early. And if I didn't know how to invest, I would go to a financial planner or an investment advisor and get sound advice on how to start investing, where to put my money, and to get best returns. Yes, regarding mistakes I've made as a new investor and one wanting to make more money, I would not jump into the stock exchange or the market or in any investment product without first learning about it and without knowing the risks involved and asking myself, why do I have to invest in that particular product or investment? So I will do my homework, I will ask more questions and make sure that I know what the risks are first before asking how much returns I can get.